And I think we said in the press release what I said last time. We need everything on the table. This is too important a country from a supply and demand point of view to take aspects of energy policy off the table.
Andrew, for truckers, 300 shipped by truck shipments, and then for rail, 600. We're under the impression that rails are doing better than some of the truckers because they're more efficient. I guess that's not it. Maybe they move more commodities. Why the difference there in how much it costs for the surcharge?
Well, you know, rail, I mean, there's fewer options on rail, I think, if I could say it that way, than there are on trucks. And so, you know, if you've got a restricted supply, you can go to any price point you need to, right? So,
right. So you're responding to what they're charging. They want 600 per shipment, so you got to go up 600, and truckers can only charge 300, so you're going up 300 there?
Exactly. I mean, in essence, we're doing what we can do. I think the airlines have the same issue, but obviously they have one mode of transport. But it does vary in terms of shipment loads, too. You can do much more by rail. You've got more volume on rail, so you can cover it more.
Andrew, the last time you were on, you said that surcharge was the term that you use when you think these increases are temporary. Do you think these surcharges that you're talking about today, the $300, the $600, are those temporary?
Well, the freight side of life here, Becky, I think, you know, I think everyone, whether it's FedEx, UPS, or whether it's the airlines, surcharges seems to be the accepted way of transmitting cost increases. So we're just following in that area, if you like. On the price of our products, we're not really going for surcharges because of that exact point you just made.
We've had you on so many times, Andrew. Are you more convinced than ever that oil is going up to levels that we used to think were impossible?
Well, short of the world catastrophically going into a recession, and that's we temporarily decline in oil prices. So in other words, you can probably think you can see $70, $80 again. I think the answer is yes. I'm convinced that the China consumption, everything we're seeing out there, suggests the long-term trend line is we're seeing oil going to its new plateau. What that number is, I can't forecast it. Lots of people are doing it. But I believe we're heading north from here, not south.
I would have asked it the other way, Andrew, and I know you're not an economist, but isn't that what you're doing, isn't what we're seeing with GM and the kind of cars they're going to make and with the way Americans are driving and what tourists, aren't we seeing demand destruction right before our eyes, watching what you're doing today?
In the U.S., yes, but around the world, no. I mean, I think what you're saying is other nations have figured out how to conserve energy. Other nations have figured out how to increase drilling. Other nations have figured out how to put nuclear power on the table, et cetera, et cetera. So I think we have a very different set of behavioral changes here in the United States, and ultimately it will be behavior change on the consumer, which hopefully will put everything back into balance. But I don't think you can add 1.3 billion people onto the planet at U.S. living standards and not see commodities go to new levels.
Does that mean the Fed doesn't really have any control? The Fed's meeting right now, two-day meeting. We're expecting to hear tomorrow about whether or not they will raise interest rates. Most people don't think they will, but is it your opinion that the Fed, even if they did raise rates, wouldn't have much control over it?
Well, I think many people have said on this whole energy thing, it's really supply and demand, and I fully agree with that. What we're really talking about here is fundamental supply and fundamental demand. Anything monetary on top of that right now does add a factor. But frankly, I think the word control, I would not give that much weight.
We were looking at a stock chart that showed Dow Chemicals stock chart versus an oil price over the last several months. And if you notice, over the last, well, since you raised prices, you've actually seen that stock pick up. Have you been hearing back from shareholders that this is the right move? This is what they'd like to see? Because, again, this morning your stock has indicated higher after this announcement.
Yeah, Becky, CEOs are never satisfied with their stock price. I think, you know, and I'm not certainly satisfied. But look, our organization here is doing everything it needs to do on a day-to-day tactical basis to get through this massive surge. Our shareholders are definitely telling us that what we're doing is the right thing. And you know, remember, we have these joint ventures overseas, the Kuwait joint venture and the Saudi one, that ultimately puts in physical hedges that overcomes this surge that we're feeling in the United States and Europe in particular. So we have the right medium to long-term strategies, and right now we're basically fighting for our lives in the trenches.
Hi, Andrew. It's Lisanne Saunders at Charles Schwab. You talked a little bit about the